Good afternoon. In this video, we're going to go over this past week's trades and the weekly recap. Before I get into the recap, if you're not in the room, you can find the link in the description of the video and in my bio section of social media accounts. Also, please subscribe to the channel, like the video if you haven't done so already. These take time to make, so you liking and subscribing definitely helps me out. I did finish this past week with 18 wins and 4 losses for a win rate of 81.82%. Below my 85% weekly goal, monthly goal, yearly goal, whatever you want to call it, but definitely below that. This past week was kind of challenging. A lot of fake outs. The first half an hour of the day has just been nothing but just massive fake outs, so it's been kind of tough, but we'll get into those when we get to the trades. Now on the Trade Ideas channel on the 6th, I said let's see, what's the 6th right here. I said, let's see, SPY calls over 410. 410 is right here, this pre-market high right here. Just rounding down for an easy number to remember. Let me just make sure that I have everything working. Sometimes things just don't like to work correctly, so. Okay, so 410 right there. It did make it over it the first 10 minutes. I did not take it. I usually like to wait the first 10-minute candle out, and that's what I did. Just looking, trying to get my Twitter page up. I had it up, but just opened the wrong tab. There we go. So first 10-minute candle was green. It went up to the, as you can see, this level right here, the 411, which was Friday's lower day, and Monday late morning's high, lower. Actually, no, this was the lower high, but the previous high was right here, and that's what it rejected. So came in green. Once it broke below the lower day, I switched to puts. I grabbed the 4100 puts at 960, and then went from 960 to 1090. So I got a little bit of a dollar plus move right there. And this is what I'm talking about, that it had a nice green move up, then it did a drop right here, and it did a fake drop, and it came back in, went back to higher day again, near higher day, then it just dumped again. Just, this is what has been like a lot of the week, like double fakes, fake pop, fake drop, fake pop, down a drop. It's been the first 30 minutes has been a nightmare. So then I did take puts at 10:15, which is this candle right here. I decided to wait it out. I think there was news this particular day. Not sure what it was, but once it broke below the 409.50 area, that's where I grabbed the 4100 puts at $9, and they went from $9 to $15.20 in that dump right there. So that ended up being a nice move on for those puts. So definitely pleased about that. I probably should have waited the first half an hour on a lot of the plays, but it is what it is. Then I switched to calls at 10:56, which is right here. No, 10:56. I didn't grab it right here. I grabbed it right 10:56. I grabbed it right when it went through VWAP, right in here. So when it pushed through VWAP, that's where I ended up grabbing it. I grabbed the 4120 calls at let's see, 4120 calls at $8.90, and they went to $11. So I didn't grab it through VWAP. I probably more or less grabbed it right here, right around the 410 area. Yeah, that's probably where I grabbed it, right around 410, because I went from $8.90 to $11. So then I had a pullback right there. So then I grabbed puts at 12.18, which is right. Okay, I didn't take it here. I could have taken it right there, but I didn't. 12.18, which is right. $12.18. I took it right here. So I took it in this candle right in here. So I probably took it right underneath the 409. Let's see the body of this candle right here, and that one right there at 409.70. So I grabbed the 409.70 short right there. with the 4105 puts at 810, and they went from 810 to 910. So yeah, that makes sense why I grabbed it right in there. Then I grabbed calls at 201, which should be right here. You can see at 200 EMA rejected, and it just stayed chopping around this RCT trend line, the VWAP, and 20 EMA, just all clustered together right here and just bouncing over it, back under it, over it, back under it. Then when it came back over it, when it broke the 40, 10, 25 area, plus being at 2 o'clock closer to the end of the day, something was bound to happen. Oh, we could have just chopped at the end of the day, but I grabbed the 4115 calls at 710, and they went from 710 to 1090, and that pushed to the 200 EMA. So we got a nice little play right there. So Monday had some good plays. Not much of action on Monday. Kind of very choppy, very rangy. Stayed in a $3 range, so not that exciting for a SPY. $3 range is not really much. Now on Tuesday, I only took 2 plays, and that's when I think I had my wife had a doctor's appointment that day, so that's why I didn't trade that much. Traded his room on the 8th. The SPY calls of a 414.50, which is 414.50. Well, how did I manage to pick that number? Oh, never mind. I'm looking at the wrong date. I'm looking at the 8th, not the 7th. 408, which is rate 408. Oh, so no, sorry. The let's see, the February 7th. Help if I looked at the right day. February 7th, traded in his room. I said SPY puts under 408. Here I am looking for the high, and 408's down here at the low. It did break below that on the first 2-minute candle. It didn't shot back up green. It started to make a high, rejected that. So I grabbed puts at 948, which is right here. So it didn't drop, got bought, failed to break out, came back down. This is where I grabbed it, thinking we were going to break down from the 409 area. Grabbed it a tiny bit earlier. I grabbed the 4070 puts at 760, and they went from 760 to 830 in that little drop right there. So then I didn't trade anything the rest of the day. I could have taken puts calls right here, but I didn't. I think I did on the challenge play. I don't quite remember. I don't cover the challenge in the recaps, but if I did, that would have been a good play right there. But calls would have been good to take right over the 409.50 area. Then I was gone for the majority of this. Then I took puts at 3 o'clock. I didn't chase this. I didn't want to chase this. I mean, I'm not quite sure what I was doing this day. This was the day with Powell. It dropped, and I think that I wanted to play it, but I didn't. I wanted to play a strangle, but I didn't, because I didn't think it would move as much as it did. So I remember saying in the room that I was going to take it over, I think over 410.50, I think, over a higher day. And when it popped, it dropped really fast, and it popped. And when it popped, it instantly went like to 411.50 or 412. I mean, it bursted through the level I was looking at way too fast. I didn't want to chase it. So, and I was not expecting SPY to move this much. And I didn't want to guess the top. I didn't want to chase it. So I just sat out. I didn't really do anything. So I just waited, and I think I left right here, right around 12:50, right around 1 o'clock is I think when I had to leave. So I didn't leave in here. I left in here because Powell was speaking right before I needed to leave, and I wasn't chasing this, and I wasn't going to guess the top. So I just like, okay, whatever. I'll wait to see if things calm down, and I'll get something in later in the afternoon. So I missed this. I know people in the room got this. So that's good for them. But I grabbed puts at 3 o'clock, which was right here. Right when it got to the 414 level, I grabbed puts I grabbed the 41.55 puts at 680, and then went from 680 to 1670 in that dump right there. So I was looking at it from the point of view, I missed this. When I came back, this was lower day and this was higher day, and I was like, I think when I came back, it was right around the 412 area, and I wasn't going to touch it right here. To me, I felt kind of trappy, and it kind of was. Nice little FU candle. If you don't know what an FU candle is, an FU candle is when you have these massive green candles like right here, then they put in a red candle right here, and they put in this red candle to make it look like exhaustion, make it look like the momentum stalling and it's going to drop, and it's like a fake out. Then you just take calls over the high of that candle, which would have paid off. And I think I was thinking about it at that particular time, but I just didn't do it. I wasn't quite sure. But usually I think I was more in stun that the market moved as much as it did with Powell. Sometimes these Powell conferences don't do anything. Like Jackson Hole had a while ago, that thing was a massive mover. But we've had other ones where he would speak at other conferences and they just wouldn't do anything, or if it was not nearly like this. So to me, I was like thinking maybe this was a top, even though it was an FU candle, and I didn't want to touch it. So, but I was saying in the room that if it got over the 414 area, which is where it broke down right here, this is where I'd grab puts for reject. And so that's why I grabbed it right there, but to reject off this. Plus, going from 4.8 to 4.15, that's almost that's a having a brain fart, $7 move. So I mean, to me, that seems pretty extreme, based on just what we're seeing for the conference. So I was very comfortable taking puts right here. Versus taking anything right here. I mean, I could have definitely taken the calls there. It's definitely a classic FU candle right there. And I could have taken it and got a good win out of it, but I just didn't. I preferred to wait to up here. And that ended up being a good move. So definitely happy about that. So got a good move end of day. Definitely happy that I made up for the time I was gone. I mean, I was not chasing this candle. I mean, that to me, that was just crazy. Buying calls up here, I would have never touched it, and buying puts would have never touched it either. So that didn't change my mind at all. So this I probably could have caught if I was around, but that doesn't matter. I had an appointment to deal with, so that was more important than the market. I mean, once in a while, you get an appointment that comes up that's just more important than trading. Trading is always going to be there. The next play is always going to be there. You never have to worry about if you miss a play or you miss an event or you have to step out for an hour or two for personal reasons. Don't ever think that you have to you missed a huge opportunity, because there's always another one. There's always another one. I didn't care about it. Whatever. The opportunities are daily, and then we can catch big moves all the time. So never sweat about missing a move. Now, Wednesday and Thursday, I struggled a little bit. This day was so tricky. I did not like playing Wednesday. Traded his room on Wednesday. I said SPY calls over 414.50, which is right here. This pre-market high. So first 2-minute candle formed, was green. Let me just blow this up right here, get all the other nice green candle right here when it broke high day. So I grabbed calls. I grabbed the 41.65 calls at 840, and they went from 840 to 980, another fake out. Then it drops. I grabbed puts right here, right at the bottom. 952, yeah, right here. So you can see a nice green candle. We caught the calls. It's a fake out. We brought it down, bought the puts right down here at the 413 area. About the 41.30 puts at 810, and it popped back up. I mean, this is what I was talking about. The first 30 minutes is just a fake out, fake pop, fake drop, fake pop, now the drop. It was like this the other day too. Here it was like this, and here it was like this. It's just been ridiculous the first 30 minutes of the market. It's been doing this, just no follow through. Usually if you get a nice strong green candle, you will get more continuation. To me, the continuation was just getting slapped. So if you were to take the trades, you take them in and out fast, take the 50 cents to $1. and take the money and run, you'd be fine. But right here, it was a trap. I didn't sell it. I didn't stop out. I kept it. So it popped back up. Then when it popped back up, I averaged down at 1021. Where is 1021? Oh, I averaged down here. For some reason, I thought I averaged up here. Averaged down up here, but I didn't. I averaged down here. So yeah, I caught puts here. Popped. Then it dropped. It looked like it was coming down. And then it popped again. Then it rejected higher day again. When it came back down, that's where I averaged down. I bought more at 440 because I initially got them at 810. The 4130 puts at 810. Added more at 440. My new average was 535, and they went from 535 to $8 right here. So that ended up working out. Then I ended up buying puts again at 1205. Why didn't I buy it right here? I should have bought it right here, but I didn't. 1205. Where is that? Down here? No. Right here? 1205 right there? Not quite sure why I bought it there. But anyways, I bought the 4115 puts at 950. I bought it right at 1205. So I bought it right here when it was coming down, I think. Then it popped back up. When it got to 20 EMA, I think this is where I averaged down. Yeah, this is where I averaged down right here. When it got up to the 20 EMA, I averaged down. I had the 4115 puts at 950, added more at 540, brought it down to 680, and they went from 680 to 890 in that little drop right there. So got my play out. These candles have been just ridiculous. I mean, this candle right here is from 411.55 to... These are dollar candles right here. A lot of these candles are dollar move, and it's green, red, green, red, green, green, red, green. It's just, there's same over here, green, red, green, red. It's ridiculous. This is just impossible to trade because you just don't know what is going to happen. These candles, you get a dollar pop up, then it just gets slapped. Then it gets bought, then it gets slapped, then it gets bought, then it gets slapped. It's just literally bipolar. So we did get puts, get out of the puts here. Now I took calls at 216, which is right here, Rejected VWAP, came back down, quickly went back to VWAP. This is where I grabbed the calls. I grabbed the 4135 calls at 580, and it got slapped. Then I decided to, I didn't average down. I think ended up being too far out of the money. I didn't want to do it. So I ended up grabbing calls at 259, which is right here. Got the green the red candle. Get this nice green candle right here. Quickly came back up to the 20 EMA. That's where I grabbed the 4125 calls at 640. Took a loss on that. So the one I took, the one I got right here at 580, I did stop out at $2, and I'm kind of glad I did. And I thought, okay, because it dropped here and it dropped more, and it quickly got bought back up. It came back up to the 4150 area that we were going to break and we were going to pop. I did grab closer at the money, like I said, to 4125 because the runs I had over here was 4135. So got closer to the money, I think. Yeah. And it just didn't work out. It got dumped on immediately. So this was not a good day of trading. Just all you gotta do is just look at the candles. I mean, green, red, green, red. I mean, these are massive candles. These are dollar candles right here. I mean, it's tough to trade these kind of plays when they do things like this. Instead of just having a down move like that, you just pop, drop, pop, drop, pop, drop, pop, drop, drop, pop, drop. It's just, this thing is just, that was a nightmare to trade. I was not pleased about trading on that day. So, which was what, Wednesday? Yeah, Wednesday. So, didn't do too well on Wednesday. Started out pretty good, but not at the end of the day, I just did not do well. Now, on Thursday, I didn't do well that day either. The traded ears room SPY puts under 413.50, which is right here, the low. Started to pop up and quickly got rejected. I grabbed puts on the red candle the next lower day on the second 10-minute candle, which is right here. As soon as I got underneath the 4413.60 area, I grabbed the 4130 puts at 780, and they went from 780 to 860. So it didn't quite get a dollar move, but you got to take that money and run because they've been fake drops, fake outs all over the place. So it did do a fake drop, came back up to higher day or close to higher day, then it got rejected again. So I did grab calls at 951 right here. This is where I got trapped, thinking we were going to do a fake out. We dropped and we got the play right there. Then it came quickly back to higher day. I thought, okay, we're going to switch to calls. This thing's going to pop. And right, I got it probably just a little too soon. And sometimes I do get it a little too soon, anticipation of the move, and sometimes it bites me, and this time it did. And I had the 4165 calls at 840, and it just got slapped immediately, and I ended up stopping out at $3. So then I ended up taking puts at 1102, which is right. I should have taken puts right here, right at the 10, right at this 413.30 area. And I took him right here at 1102. Nice green, nice big red candle right here. A little bit of a bear flag when it broke below the 412.30 area. That's where I grabbed the 4130 puts at 960, and they went from 960 to 1350 right there. Then I grabbed puts again at 1220, no, 1231, which is right here. Same thing, had a little bit of a few green candles right here. Came back down once I got below the 411 area. That's where I grabbed the 420 puts at $8, and they went from $8 to 1620. If he held all the way through, that was a nice, ended up being a nice little play. Then I switched to calls at they blended together. The calls did. Let's see what time I took that. 12:31. Wait, 12:33. Yeah, I grabbed it right here. And I decided to grab calls right in this drop. Because I had puts at 12:31. Then I grabbed calls. I grabbed the 4120 calls at 770 at 12:33, right in the middle of this candle. I'm not sure why I did that. And I ended up adding more at 12:38, which is down here. So I bought here, I added more. I'm not quite sure why I did that. Let's look at the hourly, see why I did do that. What was this level? The 410 area? Oh, that's where I got it right here. Yeah, this is where I got it from the previous day right here. Resistance right here. There's a little bit of a pivot at the 410 area. That's why I did grab that. That's why I grabbed it and added more right there. And I tried to anticipate a support before it actually did do anything, and it got me there. So I should have never taken that trade. So yeah, I should have never taken that. Even though it was a good support area, it just didn't show any signs of support. I just tried to knife catch and ended up taking a hit on that one. So on that play, so shouldn't have done that. It is what it is. Let's see how many losses I take this week that I could have avoided. Definitely at least one, maybe two. So, but I'm not going to dwell over it. I don't care about losses because I don't usually lose that much, and when I do, I can make it back on the next play very, very, very easily. And I don't have any fear when I trade after losses. In fact, I'm more confident after I take a loss because I don't usually lose two in a row, and the more I lose in the row, the more confident I get because I get more cautious, I get more patient. I want to make sure the next play I get will be a winner, and they end up usually being pretty big winners. So it's part of the hot hand fallacy. If you don't know what it is, talk about it in the room all the time. The more you get right in a row, the likely you're going to lose one eventually. And the more you lose in a row, the more likely you're going to end up getting something right. So it's a true event that happens. So I'm a big believer in it. So I rarely lose two in a row. And so I have no fear about going in heavier and heavier every time after a loss because that's just the way I am. no fear. Now on the Friday, SPY puts under 404. That's what it was in the trade ideas room. Right here is the lower day. Did not do that. Green candle. Once it broke below the first 10-minute green candle, I took puts under almost kind of rejected previous day's close, which is this white line. Came close, but not quite to it. Then when it came back down the lower day, that's where I ended up grabbing the 50 puts at 920, and they went from 920 to 1040 right there. Got a dollar something plus move. Same thing happening right here. It's just been happening all week long. Fake drop, fake pop, fake drop, and a pop. This is just what's been happening. It's very, very, very annoying. So I didn't take it right here. I thought about taking puts at PDC, but I do not like taking puts at PDC at near open, and especially when it's so close to it, because when price is at open, you end up getting the most volatile moves, most fake outs and fake breakouts and stuff like that. And when you have EMAs, VWAP, RCT, PDC, all these other indicators I use as support and resistance levels, if they are close of the vicinity at open, I kind of ignore it, because the first 30 minutes, the SPY just goes nuts and just does what it wants, and it usually does ignore these indicators at open. They work the best when there's distance, like when you have I'm not going to be able to find anything, I don't think. Like right here, as you can see, it dropped down, it came back up, VWAP rejected. When you have this kind of distance, that's when it works good. But when you have it where it's like this, it kind of like the EMA is just getting ignored, VWAP is getting ignored, it's slicing through it in both directions. It's very, very bipolar at the beginning of the day. So when you have indicators the first 30 minutes or so right near open, I usually ignore them. For that reason, they do ignore them. Look at VWAP, slice through VWAP and the 20 EMA like it was nothing. So they usually gets ignored because of the volatility and the bipolar action that happens in the morning. So we did get the puts right here. Try not to get too off track, but to me, this is very important to make a note of this, that if PDC was up here at the 410 area and it was like 10:30 or 10 o'clock, and it came up here and came to it, then I would have taken probably puts off from it, because that's definitely more of a feasible play to play, because you get some distance, and 30 minutes of the open is pretty much over the bipolarness or the craziness of SPYs. Usually over by that point in time. It's a little more stable, if you want to call it that, but it didn't quite do that. So it did react to it a little bit. So when it did get underneath the let's see, this 406 area again, I grabbed puts again at 10:02, which is this candle right here. I grabbed the 40-50 puts again at 8:40, and then went from 8:40 to 10:40 again in that little drop right there. Then it popped. I grabbed calls at 10:31. Why did I grab calls right here? Oh, okay. I think I was thinking this was an FU candle. It went right through PDC like nothing. See, it's 10 right here. It sliced through it like nothing. It was so close to PDC anyways. It was likely to get pushed through. I probably should have taken calls over this, but I didn't. I think that was news. I think it was consumer sentiment that dropped on Friday. I don't really remember. Big green move. Yeah, big green move right here. Then you had a little doji candle right here, and usually this is where you see FU candles. And I took it prematurely. I took to 4,100 calls at 10:31, which is right here, thinking it was going to break. I got it just too early, a few minutes too early. I got the 4,100 calls at 8:40. It dropped. I held it. I didn't do anything with it. I just kind of held it for now, thinking that we're going to stay in a range, because we had a big move right here. Usually after a big move, we have a range day. Usually, not always. Nothing is ever 100% in trading, but usually when you have big moves, there's a range day afterwards. So it didn't break out here, came back down. So I ended up adding more at 12.54, which was right here. I ignored it here. I thought about averaging down here. I didn't quite pop right here. I was thinking about averaging down. Forgot to higher day again. It didn't. So when it came back down and stayed within range and started pushing up through VWAP, this is where I grabbed it. I added more at $2. If I remember correctly, I think this is one I did sell a couple on. I only had a few left, and I ended up adding a bunch more on it. But anyways, I added more at $2, making my new average $3. So they went from $3 to $5.80, way outside the money, but they ended up panning out. So definitely, instead of if I added, you could have got something closer to the money and got a lot better play than what I did. So, I mean, if you got at the money calls when I added, you probably would have got probably a 100-200% move play versus almost averaging down and waiting to get green and going, probably 70% or whatever. So then I took puts at 226, which is rate 226. Right here. I grabbed the 4075 puts at 660 right here. It went down to VWAP, popped back up, rejected PDC. When it came back underneath it through VWAP again, I grabbed the 4075 puts at 660, and then went from 660 to 850. You got to take the money and run. It was a fake out. Then when it came back up through PDC again, I grabbed calls at 313, which was not right here. It was right here. 313 right here, right here. Grab calls right here, right in this dip. 313. Not quite sure why I grabbed it there. I can see why I would have grabbed it here. Inverted head and shoulders. You get the left shoulder right here. You can see this is the left shoulder, your head, and the right shoulder. So when I pull back, I grabbed the 4085 calls, thinking that we were going to pop. And it did end up popping. Plus, you get an ascended triangle right here. You can draw it right there. You can just lower and top of it right there. So it's making higher highs. And it's flatlining right here at the 407.90 area. And so you get two bullish patterns within each other. So to me, buying calls down here at the dip, at PDC, I was not afraid to grab calls there. So I grabbed the 4085 calls at 510, and they went to 970 on that pop right there. So I definitely like the setup, the inverted head and shoulders within a larger ascended triangle. Definitely did like that play. So going into end of day on a Friday, very, very likely that it pops. So I definitely like that. Friday was a lot better day. So Friday ended up being a good day. I think I could have got away with two less losses than I took, but it is what it is. It's always easy to look at trades after the fact to say, oh, I could have done this, I could have done that. So that's the biggest mistake that a lot of people make. They always see, oh, that move, I should have held for that. You don't know when you're in the trade and when things are happening. You don't know that it's going to go 1,000%. You don't know if it's going to go 10%. You just don't know at that particular time how much it's going to go. Or you don't know if it's going to be a fake out or not. It's always easy to look at it after it's already happened to see, okay, I should have done this. So, I mean, when things happen in real time, you just get to anticipate fake outs, you can anticipate rejections and stuff like that. So that's why when you start getting up $1 or so, you start reducing risk and start selling into strength. And if you start holding for big home runs, your chances of hitting a big run is going to be very slim. But if you end up taking like the dollar or two moves, you take the base hits, you'll do a lot better and things will start changing. But if you start holding for massive moves, you're just not going to get them. You're going to take on a lot more losses than wins, and then you'll end up taking hits on your account. So don't do that. Focus on base hits on the dollar plus move, and wait for the right times to enter trades, and you'll end up doing a lot better. So that's going to do it for the recap. I hope this has helped, and thanks for watching.